This is the FCTO Daily Forex News Report for the 11th of July 2013. The US dollar dropped sharply overnight as markets were rocked by the Fed's mixed messages. The Federal Open Market Committee minutes for the June meeting sent a mixed message to the public regarding the Fed's tapering of quantitative easing. At the minutes, it was unveiled that many of the policymakers did not believe that it would be appropriate to taper asset purchases at the moment. Yet in the addendum, it was indicated that almost half of the participants would like to pare the purchases later this year. Participants in the later statement included non-voting members. Financial markets were lifted by the comments as it signaled the Fed might not begin tapering as soon as previously anticipated. These two conflicting messages have made the outlook of the Fed's policy stance more confusing. Yet participants in the economic projections included non-voting members. This suggested that non-voting members are having a more hawkish outlook than the voting ones. At the press conference, Fed Chairman Bernanke affirmed that the Fed's monetary stance would remain dependent on the economic data. Meanwhile, Bernanke said in a speech that the highly accommodative monetary policy for the foreseeable future is what is needed in the US economy. He said the Fed is trying to communicate two different policy tools, and they are trying to achieve a substantial improvement in the outlook for the labour market in the context of price stability. He noted that it will be some time after we hit 6.5% before rates reach any significant level. He emphasised there is more prospective, gradual and possible change in the mix of instruments, but that shouldn't be confused with the overall thrust of policy, which is highly accommodative. Financial markets responded rather differently. 30-year yields surged to a new high of 3.792% before closing at 3.688%, still another higher close. But 10-year yields, while also rising, were limited below recent highs and closed at 2.68%. Stocks had little reaction and closed slightly lower by 8 points to 15,291. The dollar index dropped sharply and is trading at 82.7 compared to the 2013 high of 84.75 made earlier this week. In Japan, the Bank of Japan held policy unchanged as widely expected. The target to expand the monetary base by 60 to 70 trillion yen per year was maintained. Rates were kept near to zero. The vote was unanimous. The Bank of Japan noted in the statement that the economy is starting to recover moderately, an upgrade from the prior outlook of picking up. Kaiuchi proposed to make the 2% inflation target a medium to long-term goal rather than 2 years, but was voted down 8-1. The inflation forecast was kept unchanged as it expected inflation to reach 1.9% in the fiscal year starting April 2015. Though inflation projection is nearer term, was revised down to 0.6% in current fiscal year and 1.3% in the next. On the data front, New Zealand Business Manufacturing Index dropped to 54.7 in June. Japanese machine orders rose 10.5% month-on-month in May. Australian employment unexpectedly rose 10,300 in June, but the unemployment rate rose more than expected to 5.7%. Canadian New Housing Price Index, US Import Price Index, and jobless claims will all be featured later today. For all the news affecting the Forex market throughout the day, join us at forexcurrencytradingonline.co.uk. That's forexcurrencytradingonline.co.uk.